You tried him. Okay. Ah, okay. I will tell him. I'll find time to look for him and tell him because he lives far away from where I am. But I'll tell him. Okay. Yes. Somehow. Which office? Which was the licensing office? Okay. And he has to be the one to collect it. Somebody cannot collect on his behalf. Let me tell him first. He can come back. He is. He is. But now, man go dey look for here and there now for money to. It's fine. It's fine. It's fine. Now money.
Hello, everyone. Good morning. Good morning, everyone. Thank you for joining us once again. This is our morning market review. We do this every trading day, Monday through Friday. So we analyze the market for you, give you tips and tricks. So my apologies for starting a bit late. All right. Sorry about that. There were some glitches where I was trying to settle. So we are good right now. So guys, we are hitting the ground running right now. We're starting right now. So let's do a little sound check. You can hear me, get to the chat room. Let me know I can hear you. My name is Emmanuel Odogu. So it's nice meeting you guys once again. I want to believe the market has been fair enough to you. Like fair enough. I want to believe you have been on the profitable side. You have been cutting shorts. You have been cutting your losses short. It's almost a mantra. It's almost the law that you cut short your losses because not all your trades will be a winning trade. Most persons have not come to that truth. They have not come to the acknowledgement of that truth, that not all their trade will be a winning trade. So you cut short the losses, you allow the winning trade to run. So, but most traders do the direct opposite. They cut short their profits and allow the losses to run. Some of you will need to write this down. You cut short your losses, allow the profits to run. Well, most traders, what they do is they cut short their profits. Once it enters profits, a particular hormone is released, and that hormone is called cut short the profits. So they quickly cut short the profit. Now the reason is because of the fear that the profit will reduce, right? But then there is no fear that the losses will increase. There is no fear. So you see, that's the wrong thing to. All right, guys. I think that's the little rant before we start. You understand that, right? You allow the profits to run, and one way you can allow profit to run because somebody will want to contest this statement. One way you will allow the profit to run is to protect the profits. I want to believe you know how to protect profits. Once your trade is on profit, let's say profit of 20 pips, you can quickly adjust your stop loss from the risk zone to the profit zone. Again, if you don't understand what I'm talking about, maybe I'll drop my number at the end. I can explain it to you. Okay, one on one. You adjust your stop loss from the risk zone to the profit zone. So once you place a trade, sir, your chart, I mean your trade, all the position is divided into two. We have the profit zone and the risk zone. So let's take a buy, for example. I just directly all of the areas and prices directly above your entry price is called your profit zone. You understand what I'm talking about? I want to believe you know entry price. All of the areas and prices just directly below your entry price is your risk zone. For a buy trade, directly opposite is for a sell trade. So for the buy trade, let's continue on that. So your stop loss is on the risk zone, your take profit is on the profit zone, right? So once you're on profit, then you can adjust or you can shift or you can displace your stop loss from the risk zone. You can adjust it into the profit zone and it will agree to stay there. So both your stop loss and your take profit are now in the risk zone because you are now in profit. So let's say you have a profit of 20 pips, for example. You know that 20 pips can be 200,000 naira, right? It can also be as small as let's say 20K or even 2K, depending. So you can adjust your stop loss and protect maybe 5 pips, right? Don't keep it too close to the market price. The market price is at 20 pips. You can put your stop loss at maybe 5 pips. Then you're protecting only 5 pips. So then if the market goes up further, you adjust it again to 20 pips. By that time, the market must have reached 30 pips. So that way you allow the profits to run. So once again, guys, we are done with the ranting. Thank you very much, guys. Thank you for joining us again. This is Morning Market Review, MMR. We do this every trading day, Monday through Friday, 8 a.m. to 9 a.m. One solid hour of market analysis. We give you tips and tricks on how to navigate the market profitably. We also give you previews and reviews of what the market has done to us to put in the driving seat, and of course, you drive the market profitably. That's what we do here in rally trade. So, guys, now you can sit still, grab a popcorn. No, it's too early for a popcorn. Grab a bottle of water, man. No, not cold one. So let me share my screen so that we can start right now. So I will be starting from looking at fundamental events, how fundamental events can affect our chart. Remember, trading is done on the chart, and you can do nothing against the chart. I'm telling you, most person get angry with the chart. They get angry with the chart. I don't even understand this itself. No. One way to understand the chart is to look at fundamentals, right? Is to look at the news. So you may just want to open Forex Factory and look at the news events, then use that news event to trade technically on the chart. So guys, let's do that right now. I'm sharing my screen right now. I want to believe you guys. For those of you just joining us, welcome. I can see you right there. You are just joining us, Jonathan. You're welcome. Oh my goodness. So let me share my screen, guys. So guys, I've been able to share my screen now for this particular uncle here. Mr. Chuku. Nana Chuku, you can hear me. Please put off your video. Thank you very much. Thank you very much. Thank you very much. Mr. Nana Chuku, please put off your video. So guys, this is my screen. This is my Forex Factory. Just type FF, right? FF on the chat room. You can see my screen, Forex Factory. So there are several websites you can get to check news event, macroeconomics indicators and events that can affect the chart. Trading is done on the chart. And we call that technical analysis. So you can check, please, really quick. So this is Forex Factory, guys. Can you see my screen? Okay, fine. I can see you there. Thank you. Now, this is the news activity, and today is Thursday. Wonderful day. So this is Thursday, the 1st of November, right? November. It's just remaining barely less than 2 months for the year to go. I want to believe your trading journey has been superb. So for today, we have 6 by 12 past 6 a.m. in the morning, early morning. So we have JPY, news on JPY, that's their central bank governor, the Bank of Japan. Governor Yuda speaks, that's a non-data news. Of course, the news are divided into non-data and data news, right? So non-data news means you will not see any data because it's a speech. It can be a report, it can be a broadcast, it can be a press briefing. So 9 a.m. today, we're expecting the governor there in Reserve Bank of Australia, that means to affect the Australian dollar. Governor Bullock speaks also in non-data news, right? So this speech are actively scrutinized by investors and of course traders all over the world so that to look if they will drop clues on interest rates and open market operations, what their thoughts is on the market, and of course the economy as a whole. I mean the economy of their domestic currency. You understand what I'm talking about? Then of course that will be by 9. Of course by 9 it means we expect some movement on the Australian dollar. So any of the currency pair with us, any of the currency pair with the Australian dollar will be experiencing some movement by 9 a.m. guys. Something like AUD USD, of course, card, AUD card and all of that. Then, of course, then by 2:30 p.m. today, we have another high impact news that will be on unemployment claims. The unemployment claims has been released in recent times. They've been releasing it weekly, right? Unemployment claims from the US. So we're expecting the US dollar to rock really hard. Of course, you know that. Now, this one is a data news, which means we're expecting the data release. That data is called the actual data, as you can see right here. Of course, this is unemployment claims. This is actually the news that keeps track of those filing for unemployment benefits, right? Those that are filing for unemployment benefits, in other words, invariably those that are unemployed. So, and of course, we keep track of the data. If the actual is less than the forecast, it will be a good news. That means less persons are filing for unemployment benefits as compared with the forecast, which is good. That means less numbers are unemployed. Hmm? So if we have such news in Nigeria, come on, guys. Say, guys, come and file for unemployment benefits on monthly basis. You'll be paid 100,000 naira. Come on, guys. You will expect the number. That number will be more than 150 million Nigerians. I can tell you that. We are 200 million Nigerians, but I can tell you, they say, come and fight for unemployment benefits. You're unemployed. We'll be rocking 150 million guys. So you can tell, right, that the numbers will be up to 150 million. Then the following week, guys, guess what? The number will increase from 150 million to 160 million, right? So if that number keep increasing, it means, does it mean that these people are not working? Or something like that. So you understand that, right? So we're trying to bring it home, so to make it more real, right? More realistic, right? Before they know it, the 200 million Nigerians will be filing for unemployment benefit, guys. Oh my God, Nigeria, my country. Now, very wonderful place to be in, I can tell you that. Now, then, of course, then the rest of the day, we have the medium impact. Existing home sales will be coming by 4 p.m., right? Existing home sales. So that one keep track of home sales across the country. That tells you whether consumer spending consumers have confidence about the market, or the economy. They have money, they are spending, they are buying homes, all of that. So of course, if that number keep increasing, it means there is money in the economy, inflation rate will soon increase, and of course, that alone will increase the value of the currency, right? Now that's for Thursday, right? Thursday 21st. Now then, of course, tomorrow being Friday, we have a lot of red news, like as you can see. So tomorrow is actually a World PMI Day. Now don't take that to the bank, and that's just my own word. That's my own way of putting it. World PMI. That means PMI, purchasing managers from different strong nations of the world, like the Eurozone, the Europe, the UK, the Swiss, the CAD, even from the United States, right? So I call that the World PMI. That means tomorrow will rock really hard. So guys, I think we've done justice to this. That means by 9 a.m. today, we'll be expecting the AUD to move very well. So if you have your technical analysis in place, guys, you can take advantage of this move. You have your setup in place. You place your trade, you put stop loss, you put take profit. Now, most of the time, because of this news, the volatility will just move it straight to hit your take profit. The same thing with by 2:30 p.m. So, guys, I think that's all for today. We're trying to keep it very brief for fundamentals. So, we'll switch over right now to technical analysis, guys. Technical analysis, those that are taking their destiny in their hand. Come on, guys. Those that analyze the charts, and of course, and from the charts, of course, from the information they have seen on the news website, they analyze the charts, bearing the information in mind, they're able to take their trade, start with their trade, manage their trade, and of course, make profit at the end of the day, and of course, they are good to go. So, guys, I'll share my screen right now. Back to technical analysis, guys. Hello, everyone. Welcome once again. This is Emmanuel Udogu on the morning market review. We do this every morning, trading day, 8 a.m. to 9 a.m. One solid hour of market analysis. So, guys, we're right now on our chat. Are you guys with me? Those of you joining us, hope you're having a nice time. So now we try to do this analysis from USD index. So let's start from USD index, right? USD index. So USD index is actually a basket of major currencies across the globe compared with the US dollar, right? So that means invariably you want to know how strong is the dollar, you look at the USD index. Most traders I know don't know USD index. No, it's not a good thing. So, sir, before you make your trade, come and check USD index, right? Most especially or especially if you are trading any of the USD currency pair, right? Or any currency pair that has relationship with the dollar. So guys, I think from what we can see here, we have a break of structure to the upside. The kind of the analysis we do here is market structure analysis. So we look at the market structure. The structure is built by the highs and the lows, and everybody can simply understand highs and lows. So this is a high. The market traded above the high. We call that a break of structure. Just very simple. Just very simple. The market created a high, right? And retraced. Why did it retrace? It retraced because the market broke. It retraced because the market broke a high, series of highs, and created a new high. So anytime the market breaks a high and creates a new high, let me take it again. Anytime the market breaks a high, we call that a break of structure. Now, anytime the market does that, it ends up creating a new high. You understand that, right? I will take it again. Anytime the market breaks a high, we call that a break of structure. So that means the highs are the structure. You get the point now? Or anytime the market breaks a low, we call that a break of structure. That means straight line equation, guys. It means the lows are the structure. So the market structure analysis is simply focusing on the break of structures, gathering of momentum, loss of momentum. So a break of structure means the market has gathered enough momentum in the direction it broke the structure. That means by just trading above this high, we already see. Let me even draw it out for you. By just trading above this high, we are already seeing a buy momentum, right? And let me ask you, or let's look at this point. So that buy momentum actually played out. You can see all of the buy momentum. All of this buy momentum came or was born because we had this break of structure. Now, anytime the market breaks structure again and forms a new high, the market tends to retrace. The challenge is usually whenever there is a break of structure, we're already anticipating the market to retrace. Anticipating, that means we are not fully in control of when it will retrace. But then eventually it will retrace. Now, when retracing, you can equally go to a local support. You can look for a support level for the market to retrace to. Now, if you look at this level, I actually marked this level for the market to retrace to this level. It did, and actually it pumped below that level, right? And of course, they're going up again. So guys, fast forward to what's happening right now. The market has broken this structure. This is the known structure we are seeing right here on the H4 time frame. The rest of the movement is just one momentum swing to the upside, right? So now, if you watch carefully, this is actually the retracement we are seeing, right? So the market has put in this retracement for us. Now, that means the next time the market would like to break structure again, the market will be trading above this high, right? So my anticipation is that the market will trade above this high to form a new high. So this right here is the support. So from everything we are talking about, it means the dollar is on an upward trend. Long story cut short, guys. So if the dollar is on an upward trend, it means we are seeing enough momentum in the dollar going upward. Now, this analysis is done on the H4 time frame, right? So that means this analysis is best for those that are leaving their trade to run for a long time. A long time, like for more than one day. Don't get me wrong. A long time doesn't mean for forever. So you place a trade, that trade can last the next day, the next 2 days. Now, this analysis is also best for those that are doing day trading. Day trading because you want to know what the big boys is doing. I mean, those that are looking at H4 time frame, right? So you want to know what they are doing and make sure that your day trading analysis also align with what the big boys, or if you like, the big money. You know, just like I always say, the market is divided into two: big money and small money. So if you hear me call big boys, I mean big money. If you hear me call small boys, no, don't call small boys. Oh my goodness. All right, guys. So let me drop down to a much lower time frame so that we can get the perspective. So guys, In this much lower time frame, you can see that the market have tested the support. We call that the local support. Now, actually, this is a double bottom, right? This is actually a double bottom the market have created for us. So that shows that the market have tested this level to be a support. Then from here, it just be moving to the upside. So from my own analysis, I am projecting, envisaging the market going to take out this high from a new high. So the market will do something like this, right? To take out the existing high. So that means this high becomes our target liquidity. So the market runs on liquidity, that already. But if you're hearing that word for the first time, quickly write it down. Wisdom demands that you write it down. If you're hearing that word for the first time, the market runs on liquidity. So the market runs on the available money in the market. Okay, so the market looks for money. So the market is actually trying to get to take out this target liquidity so that it can form a new high. So guys, now if you watch this time frame is 30 minutes time frame, so that means we have actually done analysis on the H4 time frame. We are doing the same analysis on 30 minutes time frame. That's what we call top-down analysis. Top time frame, H4 time frame, down is the 30 minutes time frame. Now that we have seen some level of strength on the dollar here, remember the dollar is still trading above, okay? Right now, the dollar is still trading above the open, right? Yes, so this is the open for the day. So let's look at Euro USD real quick, guys. Euro USD. Oh my goodness. So we saw some level of strength in the dollar. Of course, Euro USD, since USD is a denominated currency pair, of course, the instrument should be pointing downward, right? So that strength I saw in the dollar, I would like to now that strength I saw in the dollar, I would like to take advantage of it here, right? Let me take advantage of it here. So quickly, I'll just run some analysis. The strength is already showing for today because the market here is trading below the open, right? The market is trading below the open here. So over there, the market was trading above the open. Here, it's trading below the open. So doing my analysis, I would have loved to jump in with a sell, but let's do analysis for analysis sake, right? So this instrument is still rocking the lows, right? Now the instrument is actually rocking a support level. This is a support, and this instrument has been below around this support for some time now. The market has been rocking this support for some time now. So you cannot survive a swing trading. You may just want to do day trading, right? So on the 15 minutes time frame, 30 minutes time frame, this market has closed as a bearish candlestick. So I would like to come in with the sell, right? So this is a good opportunity to enter a sell, guys. It's a good opportunity to enter a sell. The market may just be going down, okay? Now, because now we are seeing a bearish candlestick. The bearish candlestick is actually trading below the opening price, right? So that's a good time to go bearish. Then target this low. We are targeting this low, right? So we are targeting this low. So you may want to go in with the sell anywhere around this level, right? So sir, anywhere around this bearish candlestick, you may want to go in with the sell, right? So anywhere around this bearish candlestick. So anywhere around this bearish. So my time frame is 30 minutes time frame, guys. If you're equally on 30 minutes time frame, anywhere around this candlestick, you may want to go in sell. Then of course you target this low. This what we call local support, right? So you target this local support, guys. So then of course the surplus will be above this high. You'll take profit here. Now, another reason why we want to consider a sell position is because technically speaking, we looked at the USD index. USD index is actually trading above the opening price. On the H4 time frame, the big money is looking at it. The dollar is strong. It's targeting the recent high. So you may want to be bullish on the dollar. Being bullish on the dollar means all of the USD denominated currency pair and a currency pair that has the dollar as the quoting currency, sir, you may want to sell those instruments, right? You may want to sell those instruments. Oh my goodness. All right, guys. So now you see what I mean? You can enter selling around there, you take profit just below this low, then of course your stop loss above this high, then you're good to go. Now that's for Euro USD. Let's do one for USD, GBP USD, one of my favorite instrument, guys, GBP USD. GBP USD, guys. So also on GBP USD is the denominated currency pair. I mean, USD is the quoting currency pair. So let's do analysis from the H4 time frame, guys. So obviously this is a downward trend, right? You will not see this and say it's an upward trend. So it starts by you telling yourself the trend. So this market has been on what we call a range, right? So we saw this rejection. The market gave a rejection somewhere here. The market gave a rejection. So this is a rejection, right? This candlestick is called a pin bar, or it's not look like a pin. It's a pin bar. And when did this pin bar even happen? Chat. So we saw this pin bar. We saw this pin bar on the 14th of November, right? The market gave that rejection. So the pin bar is a candlestick that actually looks like a pin, right? In other quarters, they call it the hammer. Now, in this case, it is an inverted hammer, right? Because it's looking upside down, right? It's actually a pin. So it belongs to the categories of candlestick we call pin. So what does it mean? The pins or the pin bars or the categories of hammers and inverted hammer, they show rejection on the market. In this particular case, to be specific on this particular one, that this is an inverted hammer, right? So it shows a rejection, right? So it shows that the price is being rejected at the upside, right? So it shows the price is being rejected to go up. So if the price is being rejected to go up, it means the dominant force is still the sellers, right? So buying pressure is being rejected. That's what it is. So whenever you see this on the higher time frame, your higher time frame can be the time frame the big money is looking at, right? The higher time frame is the time frame the big money is looking at. So let me engage you guys a little bit. Somebody should mention one of the time frame they think the big money is always looking at. Mention one of the time frame you think the big money is always looking at. Let's go. Get to the chat room. I'm trying to pause you a little bit. Get engaged. Mention one of the time frame you think the big money is always looking at. Okay, 4 hours and daily. I can see it there. Felix, he said D1, 4 hours and daily. Wonderful. I so much appreciate all of this. Mike said weekly. Come on, guys, and daily. So all of our answers here are correct, but this H1, I don't really like the H1. H1 is low, right? So let's just stop at 4 hours. So 4 hours is the least time frame the big money is looking at. The big money. So big money traders or big money as the hedge fund traders and the rest, asset managers, they are not day traders, right? So we are the ones that are doing day trading. So since they have bigger funds, they have bigger capital, right? they tend to stay longer on the market, right? So, and every time and day, big money will always win small money. So since big money will always win small money, the onus is on us to behave like big money. Oh my goodness. They said if you start behaving like a rich man, very soon you become rich. I mean, you talk like them, you act like them, you think like them, especially thinking like a rich man. Guys, everything around us starts from thinking about it, right? The TV around you, the laptop around you, they were all born by thinking, right? People were just thinking about it. Remember, they said necessity is the mother of invention, right? So they think about it. So everything is first created in the mind. So you think about it. So let's come back, guys. So I mean, the big money, they look at this time frame, they look at the H4 time frame. So look here, guys. Look at this candlestick. It's a rejection, right? So as a day trader, you want to think like the big traders, right? So most of the time, you come to this H4 time frame, all right? Whenever you cite a candlestick like this, right, on the H4 time frame, you just draw something like a rectangle to mark this area. This area becomes your area of interest. So remember, I said this candlestick means rejection, right? So that means the price has been rejected, right? Sellers are rejecting the price from going higher. So that means there is a massive selling pressure, right? So once you see a candlestick like this, there's a massive selling pressure. So anytime the price move inside this area, it's an opportunity to do what? To join the sellers. So there has been a speculation that GPUSD will be heading straight to 1.25. I guess what's that? In fact, because of this week, we'll be touching 1.25. Actually, 1.2500, 1.2500. So if you're following analysis from this particular channel, from Rally Trade, and of course from the news channel, you know that this particular instrument is really, really going down, right? Or has been going down. So if you see this kind of candlestick, retraces back inside that area, you should be looking out for a sell opportunity. Anytime the price retraces back inside this rejection area, you should be selling. So let's say you sold here, right? You sold here, the first one. So let's say you sold here the first time, you sold here, it came here, you make some profits, you waited again, the price moved to this area. As you can see, it touched here, right? You sold, you make some profit. 2. The third time, you entered inside here, you sold, you make some profit. 3. The first time, the third, now you can see it entered here, right? It touched here again. You sold, you make some profits. Then, of course, it entered inside here again, right? You sold, you make some profit. Now you can see this one deep very well, right? Now during this deep, one may be, now let's say you enter the sell from somewhere here. One may just be thinking, it's not going down again, it's going up. But guess what, sir? It is still inside your area. So that's why it's good to map out your area of interest. So as long as the price is still inside this area, you still have the confidence that the price is still inside the rejection area. That means it may still turn. Most persons just nurse negative trade. I call it nursing, right? They nurse a negative trade. Now, nursing a negative trade is not entirely bad, right? That means keeping a negative trade. Remember, I started this section by running a rant that it's not good to nurse or to keep a negative trade to run for long. Now, it's not entirely bad if you know the reason why you're still on the trade. For example, if you have a negative trade and you top up your account, I mean, you fund more into your account such that minus 10% of your account becomes minus 0.1% of your account. You understand what I'm talking about? Let's say you have a particular account size. Let me give you an example. You have 100,000 naira account balance, right? Balance, and you have a minus 10,000 naira trade running. That in itself is a minus 10% of your account. Let's say you do a top up because of that, because you don't want to say minus 10% of your capital. You do a top up of your account to 1 million naira. That minus 10% has actually reduced to minus 1%. So in that case, you can now hold your trade because minus 1% is a small negative. You understand it? So in that case, you can hold your trade. That's one. Then number two, you hold your trade for technical reasons. Technical reasons like this one I'm pointing for you, right? Now you place a sell because it entered inside here. As long as you have mapped out this area, this entire area of rejection, as long as the price is still inside here, okay, you can still leave your trade running. Then suddenly it turned, right? And of course, it gave profit again. So let's count. 1, 2, 3, 4, 5, 6. 6 times, I can tell you, that you can make profit from just identifying this candlestick. So guys, if you're seeing this candlestick for the first time, quickly snap it with your phone, snap it, or use pen and paper and write it and draw it. Anytime I see this candlestick on a higher time frame, H4 time frame, D1 time frame, I'm already seeing my money, or I'm already seeing a jackpot. So I think you understand that. So that means going forward, sir. During the course of this week, if GPUSD should shoot up inside this area again, what are you going to do, sir? So during the course of this week, if GPUSD should shoot up again inside this area, what are you going to do? Of course, you are going to sell. Don't deny me. You are going to sell. You're going to sell. You're going to sell. Anywhere inside this area, you'll be selling. You'll be selling. And since Donald Trump became president-elect, the dollar has been gaining a lot of strength. So you want to take your share. I want to believe you also traded that news, the presidential election, or for the 5th and on the 6th, right? 5th and 6th. Man, it was really good, guys. Thank you. Oh, man. So, guys, I think your responses are quite great. We are getting a lot of value here. So, thank you very much, guys. So, Mr. Felix, you're asking, what if you see this kind of shape on 30 minutes time frame? Now, if you see it on 30 minutes time frame, now understand the difference between higher time frame and lower time frame, right? Whatever strategy you're using or whatever candlestick pattern you see on the higher time frame, it holds more value, right? Or what you're seeing has more influence on the market than on the lower time frame, right? So it still work on lower time frame, but not as much as on the higher time frame, right? Because the higher time frame, the big money are seeing it and using it, right? So they're not seeing it, they're not using it on the 30 minutes time frame. So the only reason why it works is because of the big money. The big money are seeing it and are using it. What we call the whales of the market, the sharks of the market. They are seeing it and they are using it. They are seeing it and they are using it. That's one difference, guys. So if you understand this very well, I'm just giving you one jackpot, right? So that means as you go across your trading journey and activity on the charts, all across the tradable instruments, always go to a higher time frame, look out for this shape, then come down to a lower time frame to execute. Now let's drop down to 30 minutes time frame so that we can see what the price is doing, and of course take advantage of it, right? Now if you watch now by that particular rectangle, right, that shaded portion I do on the H4 time frame. On this 30 minutes time frame, that same shaded portion is showing here. Look at it, right? It's showing here. It's showing. So it means after doing on the higher time frame, you can come down to a much lower time frame and start executing. Man, if you execute in lower time frame, it's sweet. It's sweet because the lower time frames are usually what we call detail, right? Detail of the higher time frame. Guys, if you're hearing this for the first time, write it down. The lower time frame is called detail of the higher time frame. I know what they normally say. They say the devil is usually hidden in the detail. Most persons don't like to go for details because details are usually in print, in books, and most persons don't like to read, right? So detail. So that means whatever you see on the higher time frame, if you want more detail, remember they said in the multitude of counsel, there is safety. Guys, are you hearing it for the first time? In the multitude of counsel, there is safety. Counsel is information. That means the more information you have, the more better your decision making will be. That information is the lower time frame. So whatever you see on the higher time frame, for as a day trader, you can zoom into a lower time frame, get more detail, enter at the best position, and of course, hit the market really hard. So guys, if this market retraces up to this point again, inside this area, then they will most likely want to do a sell, okay? Now, the market has just respected this local support. You can see right here. Now, one of the ways to trade and do very well is just to know support and resistance. Like what I normally tell my traders, especially the new ones. If you're a new trader here and you have traded less than a year, I'm talking to you right now. If you're a new trader and you have traded less than a year, anywhere you see the market turn, that area is actually a support and resistance. Now, guess what? On a higher time frame, it's much stronger. The assertion is much stronger, or you can take it to the bank on the higher time frame than on the lower time frame, right? So that means you can believe it more than on the lower time frame, right? So this is a turning point of the market. So the market moved down this much and turn and start moving up. So the market is trying to observe that same movement right here. So what will I do? I've seen an area of support, right? So if the market can break this level, then I will follow the market because the strength that is required to break this support, that same strength is still enough to push the market down even lower. I'm looking at GBP USD, sir. So anywhere below the support, I would like to sell, right? So anywhere below the support, guys, if the market breaks the support, I would like to sell, right? So anywhere below the support, as you can see, I'm going to show you the ranges of prices below the support, right? So anywhere below the support, guys, I would like to do a sell, take a sell position. And also for today, guys, if this price retraces up this much, if the market retraces up this much inside this area, guys, you want to sell. It's exactly what happened here, sir. It's exactly what happened here. From here, it retraces up, it moves up very well inside this area. So what do you think happened actually inside here for big money? Big money, they were loading the market with a lot of sales. That automatically turns this area to what we call a supply zone. So automatically this area is now a supply zone, right? It's a supply zone. So I think I can even streamline it even much smaller for you. This area is what we call a supply zone, right? Supply zone, supply zone. So my bias on GBUSD is still a sell, guys. Sell. That means I'm looking for opportunities to sell, not to buy. Opportunities to sell. One of the opportunities is a break below the support. Another opportunity is for it to retrace into this supply zone and for me to sell. So guys, I think we have done Euro USD and we have done GBP USD. The next instrument we're going to analyze here. So the next instrument we'll analyze here is let's analyze gold, right? So somebody just mentioned gold. I think that's CC. So let me change my chart now to gold. Guys, I am on gold right now. Analysis on gold. Let's look at what's happening to gold right here, guys. So gold is actually on, then I need to take water. Oh, God. Now let's start from H4 time frame, guys. So H4 time frame, gold is still very much on an upward trend. We cannot deny that, right? Yeah. So drop down to this is upward trend, guys. We saw this break of structure. The market have broken structure on gold, right? So let's zoom into the area a little bit. So the market has broken this structure. This is the structure we saw the market broke, right? So it broke and retested the structure. It broke it and retest it, right? This is a break of structure. This is a retest of the structure. So if you drop down to H1 time frame, you should be able to show there very well, right? It broke the structure, came back immediately to retest the structure, right? Before zooming off. So we have seen a break of structure here, right? Then also the market have done another one here. This is actually another high there. The market did a retracement, right? Follow me, guys. Let's know what to do on gold. Then we saw an impulse to the upside there. We saw an impulse to the upside, as you can see. So the market has actually broken these structures here, right? So we have seen a break of structure for a swing trade, for a day trader, right? So let's drop down to much lower time frame, 15 minutes time frame. It becomes much clearer and better. So guys, so this particular area, the market broke structure, the entire week of that particular area. So that area becomes our local support, right, for a buy. Of course, from what we are looking at break of structure, right? And the market is breaking the highs. The market breaking the structures or breaking the highs is a buy momentum, right? So that therefore you look for opportunities to buy. So on gold, our bias, what I call directional bias, is to buy. So we are to buy on this particular support area. So this becomes our area of interest. So you wait. Remember, waiting is trading. So, sir, you wait. You wait for the price. You wait for the price to get to this support area before you can do a buy. Now, another area one can also trade again is on this support, right? The opening price. The support that is found on the opening price. Guess what, sir? The market has already mitigated that level. The market may still be mitigated the second time. So these are the two areas. Now, anytime you open your chart, sir, anytime you open your chart, you want to draw these things on your chart. You can still draw these things, these areas. I call them area of interest, AOI, right? Have an area of interest on your chart. That will make trading to be it will make trading to look very simple, right? Now, you don't trade until the price gets to this area. In other words, you are not chasing the market, you are hunting the market. You're not chasing the market. New traders chase the market. We don't chase the market, we hunt the market. So therefore, now why this area? Now, look here carefully. Let's assume immediately the market opens for today, the market started going up. Of course, that's exactly what happened. The market opened and the market started going up. Right? So this area, right? This area, the opening price becomes my area of interest. Why? Because the market opened and the market gave us a bearish candlestick, right? The opening candlestick is a bearish candlestick. That immediately afterwards, the market started running upward. So for that reason, that a lot already is qualified to be what we call an order block. So an order block is the market has created for us the first candlestick to be a bearish candlestick. And immediately afterwards, we saw a big momentum push to the upside, right? I mean, a very big move to the upside. Now, to verify and confirm that that is an order block, the market will most certainly come to test it. And of course, that is exactly what happened here. The market came right in to test the level. Look carefully. The market came back to test the level, came from this up to test that particular area, right? So this is where your buy trade is supposed to come in from. Now, can the market do that again? Why not? So I've given you two areas where you can take your buy. So gold, instrument gold, we are looking at buying, right? We are taking a buy position, or we are bullish on gold, right? But we're not doing it immediately. We have our area of interest, right? So if the market falls inside this area of interest, All of this area now, area, not a single price. In trading, we don't deal with a single price. The market does not give us the luxury of dealing with a single price. So it's an area. An area can be from, for example, 1.25 to 1.251 to 1.258. So anywhere around 1.251, an example, anywhere around 1.251 to 1.258, even 1.256, all of that. So an area. So, sir, if the market falls inside this area, now what I normally do is if I have two areas like this, if the market falls inside the first one, I'll take my trade with the smaller lot size, let's say 0.05. If it falls inside this bigger one, I'll do another 0.1, for example. Then, of course, guide my trade with stop loss. Of course, take profit higher, but the market will trade higher. So, Deshola, you say you cannot hear me. Check your internet, please. The rest can hear me. Let's look at US 100, guys. US 100, somebody just asked of US 100 at DSAT. At DSAT. Okay, US 100, Ekpemski. So, Mr. Felix, you're saying, sir, that means we cannot say market has changed character on a lower time frame. Yeah, market can change character on a lower time frame. And of course, you can follow it up if the higher time frame is saying the same thing. Okay. Now, this US 100, guys, let's do H4 time frame to start with. Now, you all understand why we always do H4 time frame, right? It makes the job easier and better. It puts us, it puts us on the pedestal of the big money, right? So we think like them, we act like them, then of course we trade, we take our trade or our execution time frame is maybe 1 hour or even 30 minutes, or even my choice execution time frame is a 15 minutes time frame, guys. So on the H4 time frame, what is happening here? So guys, well, let me zoom inside the area so that way you can see. So we have this big dump. So we have this break of structure here, right? So we analyze exactly what we see on the chart. We don't just fall in love with the higher, with upward trend or downward trend. No, we analyze what we see on the chart, and also bearing in mind that whenever you're analyzing, when so whenever you're analyzing instruments like US 100, US 500, US 2000, US 30, bear in mind that this thing you're looking at are companies. They are companies, and most of the time they do well. So if you look at their 10-year chart, their 1-year chart, they're always doing well. I mean, by do well, I mean the chart is always pointing to the upside. So it moves up more than it moves down. So even at that, we don't still just swallow that as a pill, okay? So we also analyze the chart and see what's happening on the chart, because we cannot afford big retracements against us on instrument like this, because it's going to be a very big amount of money. So guys, we just saw a break of structure here. We saw a retracement to the downside, as you can see, right? So let me draw it for you. This is a high. We saw this retracement. And of course, the market broke this structure to form a new high, broke this structure to form a new high. That alone tells you that we are on an upward trend. And usually on an upward trend, the market will do a retracement. But that retracement should not retrace 100% or should not retrace lower than this low, right? So this low becomes our protected low, if you like, our protected liquidity, right? And guess what, sir? The market has just retraced, right? So if you use your Fibonacci, this retracement is somewhere around our 61.8 retracement, still above our 71% retracement. So if you apply your Fibonacci, you should be able to see it. Then from there, we saw the market open up with a gap, right? We saw this gap, and of course, that gap has already been tested, right? by this week. So verified by this week. So we saw this week, all of this week at the verification, the confirmation that the market, that the gap has been tested, right? So let's drop to 1 hour time frame to make it much, to look much simpler, right? So all of these are testing or the confirmation that remember we are still bullish, right? Because the last break of structure we saw is to the upside, right? So the upside. So this is only a retracement, and retracement are usually healthy for the trend because it offers traders lower prices on an upward trend. And of course, those lower prices are actually what we call discounted prices, which is actually going to attract more buyers. For a downward trend, it replaces upward, offers traders premium prices. Those premium prices are actually magnet for new traders to jump in at a higher price. Okay, so guys, we are still on an upward trend. Don't forget that on US 100. Then of course the market just created for us an area where we can most likely do our buys, right? So the first time it bounced up from here, one can enter a buy here. The second time, the third time, sir, what if the market present to you the fourth time? Will you enter buy? Of course, the answer is of course. The answer is yes. So, sir, if this market present to you the fourth time you want to enter buy, right? You want to enter buy. Now, so that means inside this area is our area of interest. Now, what if the market did not present that opportunity? Of course, we're going to be using our continuity trade. So that means if the market goes up, of course, we are going to follow it upward. So let's drop down to a 15 minutes time frame to make it much clearer. So we are seeing a local resistance that we want to stop the price from going higher. So a break above this resistance, that we want to continue with the buy. So, sir, if the market trades above this level, so you may want to look at it very well, right? So anywhere above this particular area, I want to take a buy. So I've actually boxed. We have actually boxed this price, right? So with respect to this area, I'm buying. Movement above this area, I'm equally buying. So my bias is still a buy. So guys, I think we've done US 100, guys. It's already past 9. Oh, thank you very much, guys. I'll drop my number. My number is 090, guys, 2626 4507. Official line 090 2626 4507. 090. So, Mr. Opelua, I say you cannot hear me. Is that true? I say it's we. I think it's you that cannot hear. The rest of us can hear. Am I correct? So, 090-2626-4507. Right? So, you are trading with a small capital. You want to top up your account. You can reach me or reach your account officer. So, we'll do that really quick for you so that your account can be good to trade. All of this analysis I've given you. So Emmanuel Udogu is my name. Guys, thank you very much for joining me. I hope you got some value. Join us tomorrow again for another exciting money market review. And of course, it promises to be very exciting. Gets better by the day. See you guys tomorrow. Bye for now.